This is how to not get wrecked investing.
This is the easiest way to not lose all your money.
Welcome to the Bean Pod. This is your place for all things stocks and crypto. From beginner tips to expert picks. Use this as fuel for your investing journey, because when you're in the know, your money will grow.
The Bean Pod is presented by DAOmaker, the top crypto launchpad in the industry.
DAOmaker allows people to participate in top crypto projects before they launch and generate some of the best returns you can find anywhere.
They also provide growth solutions for crypto projects that are looking for funding and assistance with marketing.
With their revolutionary new public strongholder offerings, everyone can get early access to top crypto projects regardless of their net worth.
DAOmaker is rapidly disrupting the venture capital industry. If you're interested, head over to DAOmaker.com to learn more. This episode of the Bean Pod is sponsored by KyberSwap.
KyberSwap is a DEX and DEX aggregator which is built to facilitate all your DeFi needs in one single platform.
Fast, cheap, and safe.
User experience is KyberSwap's sole focus to make everyone's life better in DeFi. Welcome to the Bean Pod. This is Shane, aka the Jolly Green Investor.
And this is Josh, the Nifty Investor.
Today, we're going to teach you how to not get wrecked while investing, which means not lose all your money.
And be able to identify the signs and factors that could be playing into the next one, the next bear market, or the next bull market.
Exactly. So we're going to teach you how to identify crashes, how to save your money, and how to make sure you have your profits, just become a smarter investor overall. So if you got wrecked over the past month in crypto or stocks, you need to watch this episode.
There's a lot of signs that they're everywhere.
Yeah.
And when you look back, it's a lot easier to identify them, but this is the perfect time to pay attention to what you learned and apply it for the next time.
Investing's all about learning and all about going on a journey. The worst thing you can do is get wrecked once and leave forever. The best thing you can do, and it's like anything in life, not even just investing, always learn from your mistakes and don't repeat them. So today we're going to teach you a bunch of strategies that you should write down and always think about that will prepare you for upcoming crashes over the next few years, few decades, however long your investing journey is. This episode will help you out forever.
Yeah. And if you guys could smash the like button, that would really help the algorithm. If you're watching this on YouTube, we'd really appreciate that.
All right. So $500 billion was wiped out of the crypto market and $7 trillion was wiped out of the stock market in market value over the last month or so. That is a lot of fucking cheddar. So
where is all that money going?
Well, a lot of people shorting made a lot of money.
Fuck.
People have taken money out into cash, into stable coins, whatever it is, right? People are sitting on money right now.
Yeah.
But a lot of people lost a lot of money. So let's rewind and pretend now we're kind of in the tops of a bull market. So what are we looking at to spot the tops in the future, right? And what strategies are you using in your portfolio to manage your money best for when that market starts to peel over?
So two things. In November, when Bitcoin was sitting at 69K or something like that, stock market was ripping. One thing we really need to pay attention to is the people around you. I don't know if you noticed it, but everybody was asking how to buy. Literally, like my grandma was asking me, like, Josh, how do I buy Bitcoin right now? How do I get into crypto? All our friends here are like, can you set up an account for us? How do you make a wallet? That was in November. And that was the fucking sign.
Legitimately, my dad asked me on the day that Bitcoin topped out. He's like, all right, Shane, how do I do it? I want to get a little bit of Bitcoin. I was at his place and that was the sign. The literally the all-time high. That's when he decided. And I should have helped him buy and sold all of my crypto on the same day. But it's funny. You never know the first time or the second time, but now we'll know next time it happens, right? So when everyone is looking how to buy and you're hearing about it in the media, that's the sell sign.
It's literally one of the best indicators. And it's not an objective one. It's kind of subjective in a way. You have to feel it. And now having been in crypto since late 2016, you can start to see and feel these patterns. When Bitcoin and Ethereum and a lot of the cryptos ripped, nobody was talking about it. It just happened out of nowhere. It just sprung.
Yep.
You know what I mean? So that's also kind of marks the bottom. When everybody leaves, like, fuck this space, I'm out.
That's when you want to be all in.
That's when all of a sudden it's going to pop.
You know what another good topping sign for this last cycle was? Tom Brady. He did the laser eyes, and then he did the video of Bitcoin going to the moon, like right in mid-November, because he got sponsored by FTX.
That's right.
And man, that's a fucking sell sign. Next time, Tom Brady, the GOAT, it's my boy.
Yeah.
But next time something like that happens, I am out.
We also need to look at how fast the assets are climbing. These, like, it ripped from like 40K up to 69K.
Yeah.
Crypto did, at least. You know, the S&P 500, it also ripped because the two are correlated.
Yep.
But just as fast as something goes up, it actually goes down way faster.
Yeah.
So you need to kind of recognize at what pace it's accelerating, and take some profits on the way up next time.
So that's the next strategy that I want to really hammer home. It's make sure to buy dips and sell rips. So when that next bull trend comes around and you see these every day, every altcoin's up 15%, every altcoin's up 20%, all your stocks are up 10%, you need to be taking profits on those days. And emotionally, it seems backward because you see green and you think it's going up forever. I'm going to put more money in. I'm putting more money in. But you need to train your brain to sell on the big green days. And then in bull markets, when you see red days, that's when you buy, because if it's in an uptrend, you're buying dips and you're selling rips. So next time you see those big green days on the next uptrend, and we're not there yet, train your brain to buy dips and sell rips. When you open that app up, you open your portfolio and you see big green, take a little bit off the table.
Yeah, I mean, look, let's say you put $1,000 in, right? And it starts going up. We start to see these crazy 100%, 200% gains. Your $1,000 now worth $3,000. Imagine if somebody took that $2,000 away from you. Like, you had cold hard cash in your hand, put it on the table, and then somebody just took it away from you. Do you want that to happen? I know when you see imaginary numbers on the screen, it's like, oh yeah, it's at 3,000 versus 1,000, whatever. It doesn't seem that large, but if you put $3,000 cash in your hand, imagine that feeling of having it taken away. Instead of having it taken away, take $200, $300, $400 out every once in a while and put it into your savings or your safety account for dollar cost averaging later when an event like the bear market pokes its head out.
Exactly. And going back to what you said before, things can go down a lot faster than they go up. So a good strategy that I would recommend everyone start to use is to set stop losses on your investments. And what that means is, so for example, say you own Bitcoin and it's currently trading at $50,000. You set a stop loss so that if Bitcoin goes below $45,000 or $40,000, your account automatically sells your position or a percentage of your position. That way, if you're sleeping, because sometimes the markets dump in Asia, or if you're on vacation, or if you're just out enjoying the outside world, your account will automatically take your position off the table if there's a flash crash. And stop losses is one of the best ways to prevent getting wrecked.
And that's another great thing too. You can set limit orders for the opposite direction, or when you want to buy something. So let's say there is a flash crash as well. You can also set a limit order way down there. So let's say Bitcoin's at 50K and you do go to sleep, but you want to accumulate more Bitcoin. You can set a limit order for 45K. And if it dips in the middle of the night, grabs it, and it spikes back up to maybe 50, 52K, you've just made a large percentage. So using stop losses and limit orders, really handy.
So right now where we're at in, potentially the start of a bear market, a sideways downtrend, this could be a good place to set limit orders, right? So right now Bitcoin's trading around 30K, altcoins, whatever it is, Ethereum's around 2K. If you think there is going to be another big dump, but you might not be at your phone or your computer to catch it, set a limit order. Set a limit order for Bitcoin for 25K, and maybe you'll grab some Bitcoin if it goes down there. Set a limit order for Ethereum for 1,500, right? It may only last 30 minutes.
30 seconds even.
Yeah, 30 seconds. So this is a good time to, when we're down like we are now, limit orders, limit buy orders for crashes. But when we're up and when you're up in profit, make sure to set your stop losses. And another thing you can do when you get more comfortable with stop losses is move your stop loss as your positions go up. So you set trailing stop losses, right? So if Bitcoin keeps going up, well, maybe you don't want your stop loss at 45, move it up to 50, move it up to 52, right? That way you protect your investment for any crash. So stop losses and limit orders, and a great way not to get wrecked.
So another thing we could be doing is you got to pay attention to what the Fed does, what the Federal Reserve is doing. There were so many signs that this was going to happen. Inflation was going to spike. I made a video on this a year ago. I'm like, guys, inflation's on its fucking way. Here are some of the best investments. Here's what to look out for. And here's why it's going to happen. The Fed started printing money. We had COVID. We had running rampant. We had businesses shutting down. All these things were set up. All these factors were in place to have inflation all of a sudden peak its dirty little head. And if you follow what inflation does, you often see that the market is very correlated with it. And as inflation climbs, the stock market goes on a decline during those times.
Yeah.
But it's also after peak inflation that the market tends to pick back up again as well. So the Federal Reserve is a very important indicator and something to really watch as it comes to interest rate hikes and inflation.
Yeah. So macro factors are a huge thing to watch, not just in a bear market when you're looking for the next bull trend, but when we're at that top of that bull market, you need to be watching the macro factors. Bitcoin has never been more correlated to the NASDAQ than it is right now. I think it's 90 to 95% correlated, which is crazy. So it's basically crypto is trading as a high beta or highly leveraged tech stock. So in November, when we start to see the signs of the NASDAQ healing over, well, Bitcoin's going to follow that. So that's a great time to take some money off the table. Now, of course, hindsight is 2020 and many people are screaming to buy the dip. But in the future, just make sure don't have those blinders on and you're only watching crypto. Because if you're watching only crypto, you're going to miss the macro signs from the inflations, from the CPI numbers, all that kind of stuff. So keep a watch of all markets. And other than that, other macro factors, global conflict. You know, we saw the ongoing war in Ukraine is a huge factor. It caused one of the crashes in February, and it's still ongoing. People forget about it, but everything is a factor in global money markets, and global money markets dictate not only stocks, but Bitcoin, and in turn, altcoins, large, mid, small cap. Everything comes from the macro global factors. So make sure you keep your eye on those ones.
Another thing, we're looking at China is in lockdowns right now. They're claiming it's COVID related. I think they're trying to hamper with our economy over here because they're such a large exporter of goods, but their whole economy right now is shut down.
Yep.
So now we need to look further down the road. This is another example of how is this going to affect our supply chain? How is this going to affect, our economy if China shut down? These are another factor you want to look at. So there's a lot that's happening from a global perspective. And it was almost as though like when COVID disappeared, it was a sell the rumor, like buy the rumor, sell the news event. Yeah. Almost because when COVID hit, not only did everything tank, but it rocketed afterwards. And now once everything went back to normal, all of a sudden everything sold off.
It's classic.
So
right?
It's like a giant buy the rumor, sell the news.
Well, it's always the opposite of what you think.
Yeah.
So when you're investing, you always need to kind of have a contrarian point of view because things kind of operate in an opposite way and things, because that's how the market manipulators are going to wreck the retail investors the most. When something seems obvious, economies are reopening, the stock market will continue to go up. No, actually, it will do the opposite of what you think it's going to go down.
Yeah.
Right?
Yeah.
So going back to how not to get wrecked from a portfolio position size as opposed to the macro environment, a good thing you can do as the next bull run comes back, diversify your investments, right? Never go all in on one stock or one project or one coin, because if something like what happened with Terra Luna happens, you're fucking wrecked. So diversify your portfolios across stocks, crypto. Never let, one coin be, more than 20. It depends the size of your portfolio. Some people say 5%, 10%, 20% of your portfolio, depending on how much money you have in there and your risk appetite. But just make sure you don't go all in. Don't ape into one thing and have that, because that's how you get wrecked.
Yeah, diversification across different industries and sectors.
Yep.
For example, like the commodities are doing really well, and they tend to perform the best when there's interest rate hikes. So metal, like you want to have a portion of your portfolio in some gold and some silver. As boring as it is, money's money at the end of the day. But if you can have 5% in gold and 5%, we're having a supply chain shortage and we're having a food shortage. Investing in like an ETF, like wheat. Get semi-boring. Utility companies like water. Everybody needs water, so you can invest in stuff like stocks like that. From a stable perspective, maybe looking to the larger assets like Bitcoin. You know, if you are remaining in the crypto game and you don't want to take your money out because you see Bitcoin, 20 years from now versus just over the next couple of months, zooming out, keeping money in cash. So that is part of the diversification. It's keeping some money in stable coins. So put 5% into everything. Kevin O'Leary preaches that too, right? Like that's a huge thing for him. He's like, he'll never put more than 5% in one
position.
Yeah.
Yeah. So yeah, I think that's a huge thing. And we've seen the rotation from tech stocks to commodities, whether it be natural gas, energy, oil, all that kind of stuff. And I think that kind of stuff will continue to perform well relative to tech stocks over the next probably 6 to 12 months as we enter this recession and bear cycle. So I'm not saying sell every single one of your tech stocks, but make sure you manage your portfolio, not just now during the bear market, but make sure it's managed. That's the hardest part about it, because when you're in a bull market and things are green and everything's great, everything's fucking gravy, that's when you kind of get a little risky. You're like, you know what? I'm going 50% in this metaverse coin and 50% in this meme coin because it's gone up 100%. And this person on Twitter says it's going to the moon. And you put all of your money into one project and then boom, something happens and you're done. And when people get more risk on in bull markets, and that's what we're trying to really drive home here, that's when you make those bad decisions. So try to continue managing your portfolio and your position size and your diversification, even as things look amazing. Don't make a plan and stick to it.
Yeah, absolutely. I mean, it's easier said than done. But again, I think a lot of it really boils down to utilizing this time to educate yourself. Like we talked about in one of our previous episodes, is technical analysis, understanding support and resistance, educating yourself maybe on the 10-year treasury yield. What does it mean when it's declining versus increasing, right? So there's all these little factors that you can kind of learn and set yourself up for success next time. One
of the best things you can do to not get wrecked is also join the Beanstalk Discord. We're basically doing everything we just said. We're keeping you updated on it when we do it. So even if you forget about it and you forget to, take the profits or set the stop losses, we talk about that stuff in the Discord every day. So join that Discord. It is linked in the comments.
It's our full-time gig. We're constantly looking for new charts, new information. We know, people are driving to work. They don't have the necessary time to be looking things up all the time. So we're trying to do that for you, make it digestible, and then do what you want with the information. We're just trying to help find the best information for you to help you make your own educated decisions.
We're here for you guys, and we're going to try to make sure you don't get wrecked next time.
Yeah. And so what I would recommend is tune into that next episode,
because that one is going to be a banger.
All views expressed by speakers on the BeanPod are solely their opinions. You should not treat any opinion expressed on the BeanPod as a specific inducement to make a particular investment or follow a specific strategy, but only as an expression of their opinion. This podcast is for informational purposes only.